another down day, and those grey hairs must be finding their way into your hair at the moment.
Well, you can see them, they're right here currently.
I was actually trying to focus. We're down 1%. We are holding at that 26,000 level on the JSE.
It's a very critical support level. I mean, I know I've been bullish consistently over the last 3 years or so on, but 26,000 points for me on the All-Share Index, or exactly 25,900 thereabouts, is incredibly important support from a technical basis. And I think even your most positive analysts will get a little bit worried when we drop below that kind of level.
And Nick, just look at the graph there. On that 26,000 point level, we saw a big fall off as the US came in, and we just saw that negative data coming out. We had, first of all, initial jobless claims increasing 13,000 for last week, bringing that number to 472,000. We then had the ISM number for June coming in at 56.2, lower than the market was expected. And US pending home sales, I see just out as well, a negative number. So there is no good news in the US. And then manufacturing in China pulling back for the second consecutive month. The big fall off in the local market, as illustrated by that graph.
I'd say the world is feeding off news at the moment, news flow. I mean, it usually does that on a day-to-day basis.
So mustn't I be too dramatic?
Well, I guess it's fair, but everybody's being dramatic at the moment. I mean, it's just amazing how this animal feeds off itself. You know, you've got one whole day of just negative news. There's nothing positive whatsoever.
Except for German retail sales.
There was one little glimmer of hope there. But a good example is one day American consumers are spending more. Yay, everybody's happy. Another day, you know, we sold fewer houses in America this month. The market comes off, and you can see how reactive these markets are. I mean, we were actually looking okay, and literally the last 45 minutes it just fell off a cliff. And
what do we do now? As you say, 26,000 is a key level on the JSE.
As human beings, we want to panic. We want to sell off immediately and run for the hills and sit in cash, you know, or go to gold or so on. And, you know, that is a strategy to follow. But you need to, you know, qualify that. Are you doing that based on fundamentals, or are you doing that based on the sentiment of the market? It's a very, very tough question. And, you know, stockbrokers, we get asked this question all the time. You know, what do we do now that the markets have come off? And you need to ask yourselves, you know, are you a trader or are you an investor? And I think from an investment point of view, ironically, now is the time to probably consider making some investment choices and start buying stock. I know it's the craziest thing ever, but you know, listen to me on this point. I think fundamentally speaking, we tend to always miss the main goals. The world hasn't changed completely over the last month, except that the stock exchange is down about 8%. Why is it down? Well, currently there's just so much negative statistics coming out at the moment that we're using that as a cue to sell off the market. Who's making money out of it? Well, the traders that are shorting the market. There are people making money. There are people that want this market done as well.
All right, so let's look at those buying opportunities. If you look at the likes of a Anglo-American and a BHP, well, both down almost 7% over the last 3 days.
You know, to qualify that, why I would still go for them. If you still believe in this resource upcycle, and I still believe it, and my firm still believes in it, you know, at least for the moment, we haven't changed our view. You know, we still believe strongly in the BRIC countries, Brazil, Russia, India, and China. We still believe that growth is still very stable there and pretty strong, even though, yes, we've seen a little bit of a pullback in some of the Chinese numbers at the moment. We must still understand that the majority of the growth in that country is internal, about 70% of it. We're still seeing a growth rate of 8-9%. We've actually seen
the big question is, do you believe those numbers? Because that is what is fueling debate at the moment. Do you believe the numbers of China?
There's a conspiracy theory that
when
the numbers
their
are
PMI comes out at just above the 52 level, and it's on a negative trend. Can we believe that we're seeing 10%
also a question,
continuous growth
how much can we
China?
read into numbers the whole time? I think the general thing is through experience and through what you've been reading and through what you've actually seen physically and who you speak to. I certainly believe that is something that's real. South African CEOs certainly believe it. Otherwise, they wouldn't be, you know, selling so many goods to that country. I mean, I was reading an interview now with Koos Becker, who's the CEO of Naspers, and you know how I feel about Naspers, and we spoke about it 2 weeks ago. It was 280. I thought it was a great buy.
Can I just tell you, it's 250, exactly 250. It's down 4% today after brilliant results 2 days
exactly.
out
So what has
yesterday.
changed in Naspers? Has the actual intrinsic value of the stock changed? Absolutely not. All that's changed is the sentiment in general around the world that has seen a major sell-off. I mean, if we have a look at the major unit trusts in South Africa, about a 10% holding is in Naspers. Now, all those guys selling their stock at the moment? No, I don't think so. I think they're looking at say, well, where do we buy again? From Koos Becker's point of view, he's incredibly bullish about what's happening in China. And having a look at the next 10 years of growth with regards to internet users, they're currently on a 350 million users in total in China, that's still only a penetration rate of 35% of the population.
In your opinion, a big buying opportunity on Naspers at 250 Rand?
Huge, in my opinion. Completely. Anglos and Billiton, definitely. As long as you've got the guts to do it, as long as you take fear out of your investment decisions and you look at the fundamentals of what you are doing, there is no reason why you should not consider having a look at companies like Anglos, like Billiton, like Naspers. I mean, I'm not talking my book here to keep up the markets. I mean, the markets will probably be a little bit more negative tomorrow. But, as we've seen these markets turn on no news, they can be positive on absolutely nothing. So we're in irrational markets at the moment, in my opinion. We are seeing some negativity based on fundamental statistics, I guess. But we need to look through that and we need to look at where does the value lie. And I still believe in those companies at current levels.
You're not very positive on the financials, if I remember correctly.
I've never really been, but you can look at them and say, well, they've held up quite well under the current circumstances.
Today we had Nedbank and FirstRand both closing in positive territory. Standard Bank came under pressure, losing 1/3%, and ABSA just dipped its toe into negative waters. But Investec PLC came back 3 2/3%. That is one I think that you've looked at before. Am I wrong on that front?
Yeah, no, look, we've spoken about Investec and I've shared my thoughts about them. In general, I'm not a huge fan of the big banks in South Africa. I however do like the micro lenders, Capitec and Able, and both actually looking quite decent and still consider those a buy. I think the other point to realize is that a lot of South African stocks are dual listed. All right, we have huge pressure not just from South African investors that might be a bit fearful about the markets, but from overseas investors as well. So your big companies like Anglos and Billiton are listed in many different stock exchanges, Investec for example as well. So on the local banks you might not have so much of a foreign influence on share trading as you would on the others currently. So that's why you could see a little bit of a disparity today, for example.